What's going on, everyone? I hope you're well and doing great on this Friday as we get together to wrap up this week. I'm looking forward to it as I do each and every day. And without further ado, let's get into it. There's a lot to talk about on this one chart over here, so we're going to get into that in just a little bit. Some observations to make as we look at Bitcoin tracking it this cycle versus last cycle off of their all-time high peaks for that cycle. We'll get over there. We'll talk a little bit first about some CTM 2.0 positioning. If you notice, I noticed that Bitcoin came so close over here to, first of all, triggering along. And also, I mean, we didn't never had the criteria, obviously, but also to getting into a position for another short opportunity. None of those things happen, and we remain on the sideline. Now, it's good time all the time to reflect on like your emotions. And we all know when we saw over here, Grayscale winning its GBTC court ruling, that a lot of people, rightfully, like the FOMO was real. And a lot of people are like, oh, not entering long. And then it worked on the reverse side. It was like, oh, it's exiting this trade. It's not holding on to the short. I wish it did hold on to the short. But those feelings again last night, I don't even know what the rumors are about. Like, I didn't even look into it because I feel like it's silly. But the rumors that BlackRock spot ETF has been approved. I thought it was last week that the SEC delayed their application, but look, sometimes there's more than something to rumors, but I don't know. So it is interesting to note, and a lot of people were chasing that pump yesterday. It was also weird for me to see yesterday markets basically under pressure, but seeing crypto holding well. And I think that alone could have caused some people to chase, but I'm just glad to be on the right side. And Ethereum was very close overnight to exiting. You could see it was at one point we were like on the verge of rising above over here, and a good hold is in play. So I just trying to solidify here, how CTM 2.0 is able to move through all of these, I'm going to say emotions. A lot of people trading off emotions are just going back and forth, back and forth. Yeah. All right. So I was looking at this morning. I just mentioned that institutions are overrated as being the smart money. I mean, they're very good at a couple of different things. They're very good at, and this has nothing to do with Bitcoin and the ETF, because if you remember going back a year and a half ago, I put out these tweets. They're very good at front running their clients, which is illegal. They're also very good at collecting fees from their clients. And if you look over here at, I just pulled up ARK just to pull up ARK, and you can look at like their 5-year or since inception, a nice 12% return, 3 years minus 13%. I mean, have they made more money for their investors, or have they made more money off of their fees? And it's just something to think about when you are listening to Kathy Woods. Was it Kathy Wood or Kathy Woods? Her interpretation of the markets. Do you remember when she thought that that in 2020, 2021, that this was all very deflationary? I mean, either which way, this is more signal over here and very appropriate for CTM 2.0. Candace she just recently, over the last couple of months, completed the world ultra marathon streak record of 200 days in a row. I think it was 31 or 32 miles a day that she ran for 200 days straight. And notice, like, you would think that's a physical trait to be able to run 200 ultra marathons in a row. But you notice what she puts first: mentally tough. And she says to get mentally tough and physically resilient, I think we could say like to get mentally tough and disciplined takes quite some time and a lot of effort. The lot of effort is the piece that a lot of people, I think, take for granted. Now, I know each and every one of you are committed. You commit yourself, whether or not it is here live, whether or not it is on the replay. You guys are highly committed, but it also takes the time, right? And look, this is coming from someone who has done something that, well, I mean, no one else in the world has come remotely close to. So I think that's important for us to just keep in mind over here, keep in check. Thank you. I, sometimes I feel that I should go back and listen to some of our old live streams and just to get a little bit anyway. But listen, I mean, that's the way we need to be. As we continue to evolve, continue to grow, continue to progress, and continue to, at the same time, make sure that we keep moving forward, right? Did you ever watch that movie Everest? We recently saw, I think it wasn't the first time. I think we saw it again sometime over the summer, Everest. And this one of the teams, they take like mountaineers. I'm gonna say retail mountaineers, but like just like enthusiasts, and they help them summit Everest. And they had a 100% win rate. And they get to the top, or they're very near the top. And there was this guy, Doug, and Doug was like a really nice guy. He works 3 jobs to be able to go and summit Everest, and just a really just a nice guy that you can't help but like. And he was lagging, and the leader was on his way back down, and Doug was like, I really want to make it. I'm so close. And he decided to help Doug make it to the top. And it cost him his life, it cost Doug his life, and it cost many others their life. And all I'm saying is, as we continue to progress on this journey, that it's always important that we remain focused, that we remain level-headed. I feel like this is probably like an easy time. We're currently in a bear market, and we did our thing. You've heard it before. In bear markets, you build. 3 months into the bear market, CTM 2.0 was launched. And what the collective hive mind has done since is absolutely extraordinary. And as we continue, to progress, we want to make sure that we remain level-headed. And I hope each and every one of you realize you're beyond your greatest dreams, right? And I hope it is all surrounded by good and for good. But at the same time, we always want to be very, very, very grounded. And the more successful each and every one of you become, the more grounded it is necessary to be. How many times did that happen? So many times. So many times. Whoa, I'm only seeing one comment here, Jasmine. So I didn't see your first comment, so I feel like we're missing something. You said that your NVIDIA chart is working fine. Is there anything else you need to do? If you could go back and maybe repost what you're trying to communicate, we could help you out, get you on par and set up over here. So let's take a look at what else is going on. And Cardano also was close to exiting, by the way. Cardano over here throughout this period, this bar right here was very close to exiting, continuing to hold on, and it's on the verge. It's on the verge of a breakdown, right? And we'll see what happens. We're here. I don't think I could ever, I'll be here as long as, God willing, I'm alive on this planet. Because I can't imagine, there's a different, the markets are fascinating. Some people play, the word puzzles. Other people play whatever. I'm sure there's apps. I can't imagine a way throughout life to stay sharper than participating here in the capital markets, as well as, when you retire, what are you going to do? I mean, some people like to, for example, play golf, and that's awesome. I like to be out on the links. I mean, I look forward to a day when I I guess I could do that. It's been a long time, but working for pleasure. There you go. We'll leave it. You're right on par. Let's take a look at what's going on. We're seeing the dollar here this morning, taking another run at the resistance, that line of resistance over here. It's Friday. We're headed into the weekend, and let's take a look at what the Nasdaq is doing. It is, I guess barely in the green over here, holding on to some gains. Dollar is on the verge here of turning unchanged, and yields picking up. All right, let's take a look. Let's take a look. Where to start? Where to start? I'm trying to pick the right chart. Let me go at this. Okay, Jasmine, you know what the best thing to do is? Either send me an email. That's the best thing to do. Send me an email, and then I'll make sure everything's in order. But if you do that, then after this session, I'll take a look at that. Me too. Any day, any day, any day. And how about like a self-sustaining farm getting to raise, I don't know, a very, very small group of cattle, and having the whole thing like off-grid energy, self-sufficient. That would be the dream right there. There's no question about it. Got to have some chickens and goats. But all right, let's take a look at what's going on. And 10-year is like the dollar. They're both trying to knock over here. Both trying to knock on what's going on. Looks like the market has begun pricing in from 50-50 yesterday, a little higher. Again, next Wednesday, that's going to change. So we're looking at the 10-year. We're looking at the dollar. They're knocking over here. What is that going to do to risk over here? Let's take a look at what's going on with the NASDAQ. And all right, this gives us a little bit of, we're knocking on the door too, into resistance though on the NASDAQ, and a close above this line sets off a buy impulse. And look, the equity markets continue to obviously be a beast on the upside. I wouldn't be surprised if that continues, but we got to get the close above. I don't know that that's going to happen here on this Friday. A rejection though, a rejection might set up some type of, oh, really? Sean, I'm sorry. This is like, I guess it was like maybe 2 or 3 weeks ago. I spent the weekend watching YouTube videos. So like I binge watched so many. There's this one guy, Will's channel. I don't know the name of the channel, but his name is Will. It's phenomenal. He's absolutely insanely amazing. And there's this couple living off grid in North Dakota. That's a pretty good channel as well. Sean, I'm gonna have to start a channel in the Discord. It's so complicated, but you get to the more you like, it all seems like. I remember the markets. I was taking a plane over to the Netherlands, and there was like a Barron's magazine as you get on the plane. So I took it. I'm looking at this stuff. Couldn't understand anything that anything meant. It was like Greek, But you spend a little time, and all of a sudden, everything becomes a lot clearer. 10-year. 10-year. Are we looking at head and shoulders? So, by the way, though, if we are rejected over here, taking out this low on the daily, that would be a good spot to attack next week. That's something that I'm going to be watching out for. All right. I'm going to just go ahead and just if resistance is rejected. By the way, a breakout above, that also sets out the opportunity above. So I like where we are here on the NASDAQ. 10-year, are we looking at a head and shoulders? You know what? I don't think so. But either which way, this is the neckline or the trend line that matters, right? So yeah, I mean, I guess it's because of what I mean, I feel like you go through this journey. It's like first you learn that like, oh, sugar is really bad for you. I need to read the ingredients and make sure that like I'm eating less sugar. And then you realize that like in the ingredients, there's like a gazillion things and like it's all bad for you. So then it becomes like, oh, like let me eat things that don't have all the like one ingredient things. And then you like find out that like, oh my goodness, Gates, what are they putting on top of this coating they're putting on top of organic stuff? I used to like buy organic apples in Costco thinking I'm doing my family good, only to learn that on top of organic stuff they're putting stuff that it's not. And then like all of a sudden you start looking at everything and like you like, oh my, like we want to be healthy, right? We want to eat healthy. We want a healthy mind, body, soul. It's all very important. A lot of people are realizing that, well, there's only one way to do that. But anyway, I don't know that and think that's necessarily a head and shoulders, but it doesn't matter if it's a head and shoulders or not. Here's the trend line. That would be the neckline as well. Unless, of course, see, I'm going to keep our trend line. I was trying to look left shoulder and find a trend line over here, but we'll keep our stop where it is for now. We're aware that we could put in a lower high, and you know, a sign over here would be break, but I would still give it room, you know, being that we are having this big breakout over here, and oil continues to rise. Oil rising over here, might, you know, this might be feeding off of higher inflationary expectations. Let's take a look at oil as well. And oil also trying to resume up. So we got things that are not good happening as far as for risk. And that would be if oil resumes up off over here. So it's so funny. People are hysterical. The deflationists are now talking about, well, oil's headed towards 95. Oh, great. An $8 move. Thank you. Thanks for being on the, you know, appreciate the, you know, anyway, if oil makes the next resumption up, if the dollar makes the next resumption up and the 10-year makes the next resumption up, I think that we could be looking at here at a little nice opportunity to play the rejection here on equities. What's gold and silver doing today? You're not kidding. You know? Quick move up. Interesting move, right? Quick move up. But into the resistance over here and thus far being rejected. Still clear signal, I think, getting above and closing outside of over there, at least one that's worthy of an attempt. And for some reason, I'm still gun shy about looking for the short. Again, I wonder next week if we are seeing a stronger dollar breakout over here, or even today, if we see the 10-year break up and oil, the gruesome 3, then we could be headed for a down. That's it looks like we're having trouble attracting buyers on the upside over here, but you know, but I'm saying but a lot. And then we're seeing also, if you just connected that lower purple line down, perfect retest right into it here thus far. And it looks like we're going to be testing the purple line. I'm seeing Ethereum coming off a little bit over here at 1625. Let's take a look at what's going on with Ethereum. And you all know we're following this bottom trend line that we're on right now. That would be the next second technical breakdown outside of the ascending triangle. The first one was the verge of the cliff and just jumping up. And you can see right now, a clone of that trend line is exactly where price is right now. So we're on the verge and we're close, right? Is it interesting that we, cloning that line up, bringing it up again to where we found this area of support. That's where we did find resistance, top of the range. This could be, if we hold over here, if we, whether it's here right now or into that lower line of support and we bounce, this is a line to be watching on the way up. And we'll just see what happens as Ethereum here, like Cardano, they seem to be on the verge. Bitcoin as well. So I suppose this has a lot to do with whatever happens today. Again, DXY is just unchanged, but it is coming back and able to trade off of being down on the day. Same thing with the 10-year, right? So that's not the 10-year. That's gold. 10-year now unchanged on the day. So we'll see as we come into the weekend whether or not people feel comfortable holding positions. We see Bitcoin is obviously in a precarious situation, and we've had 2 upside liquidity grabs thus far. Yeah, it's not looking good right now, but that could change very quickly. And we were so close yesterday to entering on the long side on Bitcoin, and so close, but we continue to do our thing, and that's be on the right side. All right, so let's take a look at this little guide that we've so often looked at, and that is looking at the previous cycles, a line from the all-time high, the November high. We also look at the April. We could look at that as well. But what's interesting about this is a couple of things. And we're seeing on the downside of this current cycle, we're seeing the less volatility. If we go back to the last bull market, we know that volatility was significantly suppressed to the upside. Now, probably and likely that had a lot to do with the massive fraud taking place. Everyone is aware of, for example, FTX just selling Bitcoin they didn't have. I mean, if that was actually buying, I forget how much Bitcoin they said they had on their balance sheet compared to like the none they had on their balance sheet, but it was a significant suppression. Obviously, the nail in the coffin was the Fed pivoting their policy and moving towards tapering of QE, which is tightening. But we also had other dynamics at play, right? We had also, it wasn't just FTX alone. But we did see the suppression on the upside, but we've also seen the diminishing volatility on the downside, right? So you could see it over here so far. Well, I think it's like 76% compared to 85%. This was 84%, and I think this is 76%. Could be 77. I'm not exactly sure, but whatever. I think that a lot of people continue to look for a lot of similarities in 4-year cycle behavior. I mean, whether you're talking about like, people that used to not even embrace past behavior, now primary focuses on past behavior. It could continue to happen, or again, this time could be different, and not just different on upside expectations prior to having. Like, we don't know. Well, you all know my feelings on that. I'm very cautious. What's kind of neat about this, though, a few observations to make. I'm going to make 3 observations over here. And the first is that, yes, it is uncanny that you've seen what we see deviations. Here's a big deviation. Previous cycle, price coming up and price going down over here. Okay. I'm not expecting that price is going to continue to mirror this. However, we are going to point out. Well, Aldo, I'm going to come back and answer that question after we first make the observations, because they lead into that. It's a great question. nobody knows, but I'll give my opinion on it. And we'll continue to look at that. All right. So, there are a lot more similar. I'm pointing out the one difference. Not one, but one that I see that's very clear. And then the similarities are striking, right? Going down to going up, going down. Here's a difference, the down to the up, right? But again, the similarities are striking, including like where they both thus far have capitulated. It's and then the up move over here. I mean, come on. It's ridiculous. U.S. banking crisis taking us down lower, but the move up. And then again, we move into the difference, and then a lot of the similarities, including the down move almost to the day. How many days past the all-time high when they put in that? It's just crazy. But so, that we often talked about, we might take out that low, the BlackRock low, and it could be a liquidity grab. Look at this. Look what happens next over here. You can see that the low is taken out with a big liquidity grab. Isn't that, and then if that were to happen, that's the first, I guess the first observation was the similarities is quite striking. The second observation is that what came next over there was a liquidity grab. And I guess this should be slowly ticked up, but notice that we don't come into it here's the liquidity grab and the move up, and notice that we actually come into that resistance right over there. Now, let me just bring it back to where we are. So I wonder if I'm moving it down now to that last peak over there, which is not any different than we have on our chart right over here. All right. Oh, I guess it is. I thought we had this line over here, and then we've looked at it as well over there, but I digress. Imagine that we get a move down and we take out the BlackRock low, and then we have that liquidity grab and spike up. We're going to watch that trend line over here very closely, that purple trend line, to see whether or not it provides resistance. And then we come back down and take out that low again. Because remember. Oh, I saw at TXMC yesterday a video clip on Twitter where he talked about, it was amazing. It was showing the jobs numbers coming into past recessions and how right now we're completely tracking it. And then it showed the one soft landing and how from this particular point in time, all of a sudden you saw an acceleration in the strength of the job market. So, clearly something to watch. And that goes back towards when we talked about like the primary focus of the market is inflation, and that is going to become the jobs. And then his clarity bringing to what happens and where was absolutely beautiful. But the NASDAQ didn't. Oh, okay. So that's true. So Aldo, when he talks about recessions, he does not talk about or include the 2020 recession because of, the situation, the global lockdowns. And so that makes sense because we now I look at it not only at, so anyway, let me explain. So you could see, like, again, he's not including this as a recession, even though, like, technically April of 2020 was a recession. But so I look at this though. So there is like recessionary behavior. And obviously you all know that March of this year, I said and pivoted to, okay, now I think that we're working towards a hard landing, and trying to time that. Well, that's another story. But I also look at the Fed cycle. It's not, for me, it's a lot more complicated. Don't forget. So the last recession was 2008, right? The Great Recession. And there hasn't been one since if you exclude 2020. But this was the birth of QE and quantitative easing. And since then, the business cycle has been artificially superseded by the Fed cycle. And you all know that I put a high degree of preference to the Fed cycle. Now, that does not mean that we cannot enter a recession, and it doesn't mean that we can't enter a prolonged recession. I don't mean to go off of just, these two over here as examples, because there's a whole history before that. But, this is just to say, like, is it, basically one down and Fed come in and QE and it's over? Or are we looking at a prolonged multi-year beating? I don't know, but at any point in time, if the Fed jumps in and the Fed returns to not just balance sheet expansion, which we're going to look at in a second as well, right over here. That's another observation that needs to be, we got more observations that needs to be made. But if at any, and then we got to answer this question over here. And then we got to hit the like button if we are here. But the Fed cycle supersedes the business cycle in so much as that if the Fed comes in and starts outright quantitative easing again, that's uber asset inflationary, and you're going to see a rapid appreciation of risk assets. So the lower low in a recession would be depending upon on equities, would be dependent upon whether or not the Fed sits back and lets pain occur, or at any point in time, something breaks within the financial system and they're forced to flood the system. So Fed cycle supersedes business cycle. Very, very important nuance to include when looking at and talking about recessions in this new dynamic that we live in. So going forward, I mean, it would be, we've talked about, we could see price take out that low and then see a liquidity grab. It's almost like if you just look at what happened over here, that would exactly mirror. So we still have, and be aware of whether or not we find resistance into that trend line, like over here, making that lower high off the trend line, because the trend line is up here right now. Do we come into the trend line if that happens? And if we are rejected, we're going to be like watching to see if it continues, if we have then taking out the low. Now, speaking of balance sheet expansion and what happened last time, it was over here in September. This is, by the way, some pressure on Bitcoin as you see the turmoil with the reverse repo breaking, right? So again, there's plenty of funds in the reverse repo today. And my expectations is that doesn't run out into the earliest at the end of the year. That's if all that money comes from new issuances. Once that happens, that's like a clicking time bomb. And not that I think that things are going to break the same way, but we have to be aware of what happened within the system last time, that we were in a tightening cycle. And so if, by the way, so balance sheet expansion does occur over here in September. You can see Bitcoin levels out. Look at this inverse head and shoulders that it puts in. And just to use our simple trend lines, I'm going to just extend this one out over here, right? And you could see, so by the way, like head and shoulders, inverse head and shoulders, and where's the neckline? I guess it broke over there. I was seeing if we could get an early entry. Not really. So bringing it back over here, and you could see the resistance, the breakout above. This was like, this is very important because I know also a lot of people assume that what happens next in Bitcoin is that, not a lot of people. Sorry, I'm trying to get this right. There are people who following just I don't want to say 4-year cycle behavior, but past cycle behavior, they expect that means what happens next is a flush, right? And not only that, but one time. And if we do enter, like if the business cycle has us going into a recession, and TXMC did show us what would need to happen for a soft landing. That's the acceleration in the jobs market. All of a sudden, a stronger jobs market, right? So that's something to watch out for because it is possible. Now, if that doesn't happen and we enter a recession, and a lot of people are expecting a big recession, and I'm amongst them, unless we have the Fed supersede that. Now, and the Fed may very well do that. And if we're having a prolonged recession, I don't know that we only have one type of, let's call it a flush event, right? Like it could be much more like we just look at what happened during the dot-com double blah, 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 blah. The dot-com bubble burst, right? And you had boom, 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 boom. It's vicious. That could happen on Bitcoin. That really could happen on Bitcoin. You said no one's selling. Got a bunch of maxis that are never sell. Okay. Well, here's the thing. If people lose their jobs and if people are forced to go into savings, guess what? Bitcoin is savings. And if there's no other choice but to have to go into that, and Bitcoin is at a suppressed price when that happens, forced selling begets more forced selling. There's no floor about like where the price is going to be if we're in a severe recession. Boom. All right. So again, we're not taking for granted there's only like one type of event. For me, and I would take the risk if Powell comes out and Powell drops the hammer or pushes the button and floods the system, I'm taking the risk. That for me is all right. And those moments aren't easy. It was not easy. It was the middle of March that Bitcoin had its moment ahead of the equity markets because of the BitMEX feedback loop. Like those are hard moments to do difficult things. Don't think for a second that like, oh, I know for sure that this then is the bottom and price goes up. Not at all. So, but more importantly, in this, so I've pointed out some bad things that could happen. Some good things that could happen is this. If over here we saw price breakout, balance sheet expansion is happening right here at this very moment. Now it's not outright QE and it's small, but risk is pumping off of it. Equity markets are literally melting up. I know that I love to say that because this is a melt up. This is over here, September. Balance sheet expansion begins. Let me show you the balance sheet just so you can see it. That's the Fed funds, George. Sorry. Let's bring it up over here. Oh, it's on futures. That's why. There we go. So back to the melt up, because this is what could happen. Right over here, repo breaks, balance sheet expansion begins. Balance QTNs, balance sheet expansion begins. And look at equities melt up. Look what Bitcoin started to do. Bitcoin starts over here a run. Now this run was cut short because this was, oh, it says January 8th. No, January, yes. I don't know what day that is. Let me look and tell you. Hold on one second. It's my talks of wanting to knowing exactly what happened and getting it right. So That's February 13th. So it was the last week of January, right over here, that we start talking about, whoa, things are not looking good out there. Let's be prepared. We talk about the markets that are not crashing. When the markets crashed, we were there on the right side, and coming out of it, it took a couple of weeks, and then coming out of it, and then all of macro that I know of, they were talking about we were going to be retesting this low, Great Depression, taking out the low, insolvency to come. Fed cycle supersedes the business cycle. Most people have the business cycle. That could be very confusing if it happens going forward. We could enter a recession. It could be prolonged. Anyway, jumping back to where we were just talking about. And so if this happens at any point in time where we start seeing, fast forward 2024, repo breaks again, Fed comes in and provides liquidity, or what happens if we saw more regional banks go under, Fed there to backstop it, provide liquidity. I don't know how it's going to happen. And we could also see, again, U.S. Treasury come in and implement somehow, some way, yield control curve. Again, I don't know what's going to happen with yields. Are they going to, bust soon? Or are they going to continue out of this, descending channel breakout to put on a run? I don't know what happens. And if that were happening and the Treasury came in to take action, extraordinary actions, at that point in time, Bitcoin is going to run, and it's going to run like no one's business, in my opinion. So it's not like doom and gloom, and it's not straight up new all-time highs coming. It is a very varying, there's so many variables that could take place, and all we can do is ahead of time, as we are, be aware of all of them without having a bias that we think that we know what's going to happen, and be there in real time to go ahead and take it out. Aldo, could we take out the low? And let's say that we see similar behavior in last cycle. Now, we are suppressed. When I say that, sorry, how do I do this? I just need a pause here before we move forward. China issues are good. We don't know what's going to break. It could also be the Bank of Japan. I'm looking for the right one here. I think it's going to be this one. So let me just see how far off the low we are. Huh. So I'm going to show you that we're suppressed because I was looking first, right? This is on a closing basis, how far we came off of the high. And so it was like the two numbers we gave anyway, 84 and 77, but volatility was suppressed on the downside, but now it's being suppressed on the upside, and we're actually a lot lower than we were. So let me come back over here. And you can see it. Here it is suppressed on the downside. But now we are trading actually lower than we were previous cycle. So when we talk about the COVID low, isn't that interesting that this, from where we are last cycle, actually comes and touches the previous cycle ceiling and holds on the COVID low? I mean, Although there's no actually, there's no way to answer that. I think the answer to that question is it depends on whether or not we enter at any point in time into, let's call it a severe recession, a prolonged recession, or we have some type of systematic failure, right? So like systematic failure, long recession. That's in a long recession where they're like China continues to allow the pain and deleveraging to happen. So there's no stimulus from China. In the US, they allow the dollar wrecking ball to achieve whatever goals they're looking for, and they're looking to cause pain, then at that point in time, Bitcoin could take out the low. If there is some type of breakage to the system and then a sharp outright turn to the printing, at that point, likely Bitcoin won't take out the low. I think that's the best answer I could give you about what my expectations would be for whether or not we take out the low. And we could have a different option. The other option is that we don't have either one of those things happen. We don't have anything break in the system. We don't have a severe recession. And at that point in time, if something like that were to happen, then what is going to happen, in my belief, and sorry, I'm trying to find the chart over here, is that this would happen. Look at the blue line over here on the breakout. This breakout never fails. This breakout never fails, and we take out the all-time highs from here, and we go. So, like, now I don't know whether or not if we grab the liquidity here, I don't know if we come down further. I don't obviously know any of those things, but let's assume together that this happens. Let's assume that we don't take out the bull market breakout trend line. All right. And let's say that we then resume out of here and take out 32,500, and that nothing breaks for like through like, let's say next summer of 2024. And if for example, though, we started seeing an acceleration in strength of the job market, forget about it. Bitcoin is going to go ballistic to the upside, and especially if we make the spot ETF approval without the Fed having to pivot. We're talking only to next summer, 2024. Bitcoin is making new all-time highs ahead of the summer, around the summer. Now after there, something could break. We could have a double peak next cycle. What do I mean by that? Well, next time we could have actually, we could have like what I just described occurring. And then by the summer, the economy's deteriorating and they need to start cutting rates. And then like things get bad and ugly. And then the Fed come in and the Fed like start the printers. And if that happens, we're gonna have a double peak cycle, double wave cycle. Now, to go back to this thought, by next summer, if this holds over here and everything continues status quo and we keep climbing this wall of worry, it's gonna look a lot like past 4-year cycle behavior, every way, shape, or form. That could very well happen easily. So I think there's no way to answer the question. And I think it's the best attitude out there because you see all very clear opinions about what they think is going to happen. And by the way, those opinions change as well, right? So from like new all-time highs in 2023, I still think we're going to have a left-leaning cycle where the all-time high comes quickly after the halving, like over here. And again, if that happens, I'm telling you, there's a good chance we're going to have a double wave. That's not going to be there. Yeah. So the pi cycle could be deadly on this one over here if that happens. Because the pi cycle worked out perfectly here on this one. All that stuff is so annoying. All the pi cycle worked out perfectly here, but it would not have if the Fed didn't pivot. Right? That would have been devastating. But you use the word consult. And that's the best way to look at it, because we do want to consult it when it happens and be aware of it for sure. So those are literally three of the scenarios that I foresee like are happening. And I can't tell you which one is going to happen. And I know how hard it is to time markets around macro. So we're doing our best to do that. We're doing our best to do that. And you're here over a period of time. You know, like most people thought the markets were breaking over here. They thought that the markets were breaking, and we switch and pivot over here in March. And we're like, okay, now the odds, and now everyone thinks that we're having a soft landing. We could have a soft landing. I think TK gave the best alpha roadmap for what that would entail. And that is, it doesn't mean it has to happen right now, but from what happens next is a strong acceleration of the jobs market. That would lead to a soft landing from where we are. If that happens, outside of nothing breaking in China, outside of the BOJ being able to keep things down, but those are the three scenarios. They're very realistic. There's no saying about whether or not we take out the low or not. We could take out the low, and taking out the low could be a 2001-2 type event where we take out and make multiple lower lows. We could have just one more flush out if the Fed jumps in and starts the printers, or we could hold the breakout and continue up, and we might not see any trouble into some point into 2024. Everything's on the table, and that's where we are. Which makes me feel very comfortable. Very comfortable. All right. So, Summit team has been extremely busy. Sib, Flavers, Frav, TK was joking that he wished he'd keep up, but they've gotten all the updated templates out. Next week we will be putting a bigger focus on that, reverting back to that after last week. Next week we're gonna have a bigger focus, or that continued movement into discretionary, and we're just gonna keep humming. We're gonna keep humming, and that's where we are for this Friday. It's good. Like it's so comfortable. It's so comfortable being CTM strong. That's the truth of it. People today are freaking out. They're not good. They're not happy. I put out a tweet about what's going on here with Ethereum, and there's like silence. You know, there people are not in a good way, in a good place, and we just want to do what we need to do to stay on the right side. So, but there's one observation I can make that, as you saw yesterday, I saw yesterday Bitcoin up 1%, and then like that completely like all season is on type like attitude resurface in an instant. And I don't think we're close to there yet. Not to say that we can't have any moves, and we're aware of them. Bitcoin was so close to kicking off on the upside. We would love to see it. Would love to see us put in a nice trade, and even if we come back in, we could take a nice stab out of the market into just this move of resistance. I think that this is going to prove to be the line we need to be watching. All right, everyone. Have a great weekend. Have a really good weekend. I'll see you all Monday. God bless you all. And I'll talk to you on the inside. I'm going to go ahead and figure out what's going on here with your NVIDIA charts. Make sure you're set up, and we'll figure it all out. Have a beautiful day, everyone. I'll see you all on Monday.